All right, guys, the Stablecoin Act has been signed into law, but there might be a darker side to all of this in regards to stablecoin regulation. And part of the consequence may be coming now as a Satoshi era whale, right after the Genius Act passed, moved $9.6 billion. That's more than twice as much as Michael Saylor just raised. A $9.6 billion crypto wallet. And that is sparking concerns that he would sell. And if he starts selling even slowly, it's really going to impact the market. And obviously, like if he's using like Tether right now, it might cause trouble for him and he might want to exit the market. So an OG Bitcoin whale's 9.6 billion transfer and stablecoin audit requirements imposed by the Genius Act are sparking correction concerns among some industry watchers. If he obviously sells $9.6 billion directly, it would completely tank the market. If he sells it over a period of time, we could be in for a month or 2 month long retrace, as even Michael Saylor can't buy up $9.6 billion directly. So crypto market watchers are warning of a potential correction as whales offload billions of dollars in Bitcoin, even as the stablecoin bill passed. This whale awakened after 14 years. That's 2011, folks. That's a long, long time ago in terms of crypto. And he moved 9.6 billion worth of Bitcoin, which he received between April and May of 2011. The whale may have opted to sell due to concerns related to gilding and establishing national innovation for U.S. stablecoins or Genius Act, as the U.S. government moves to enforce audit requirements on stablecoins. Obviously, I think this will transition from USDT to USDC, as that is the only stablecoin that can really sort of make up the difference, but it will actually leave the market kind of in flux. And some people like Jacob King are saying that alone will burst the biggest bubble in fraud in financial history, Bitcoin. Obviously, he does not like Bitcoin. It is true that Tether has been actually used to pump up Bitcoin price. Obviously, an overall audit on Tether would be pretty bad. But I have my doubts that they'll go too far with that because Tether is the 7th biggest holder in U.S. Treasuries. And obviously, they don't want a bunch of Treasuries selling on the market because, you know what? The interest and yield rate is high enough. And if there's a lot of selling pressure, that interest and yield rate will grow even higher. So I don't really think they want that to happen. So they're saying, obviously the Bitcoin minimalists are saying, the largest Bitcoin whales in history are dumping their holdings, this is on Twitter, quietly this week, right as the U.S. government moves to enforce audit requirements on stablecoins like Tether. That alone will burst the biggest bubble in fraud in financial history, Bitcoin. It is entirely propped up by fake money printed out of thin air. That's also not true because it is one-to-one backed, and if they transition from Tether to USDC, it will be much easier. Of course, he is lying when he says a $9.6 billion BTC whale just sold their entire stack. Originally bought 14 years ago. He moved his entire stack, but he did not actually sell it. He said he sold his entire stack for just $54,000. That is obviously not true. Moving and selling is not the same thing. And no, the fees were not $54,000. I'm pretty sure he's just making stuff up. I expect a major correction very soon once retail sheep catch on. Obviously, this was a couple of hours ago, and us retail sheep have not caught on. I doubt they're going to catch on. Yes, there is a starting of a retrace, but that's really just because Bitcoin pumped a little too much. I mean, we're talking about a retrace down to like 30, 20,000 if he sold completely immediately, which he obviously didn't, but it could move down to 100,000 or 90,000 if it's a slow move down. The whale may have opted to sell due to concerns related to gilding and establishing innovation for U.S. stablecoins or the Genius Act. So that is other industry watchers are more optimistic. According to Caitlin Tischler, head of investment research at digital asset bank Segnum, the Genius Act provides clear regulatory frameworks and compliance pathways for legal recognition of stablecoin settlement. So other people are also saying that OG whales don't care about regulations. Maybe they're selling just because they have a lot of profit. And that makes sense too, because if you have billions of dollars worth of profit and you actually want to use the billions of dollars, you might just want to sell. And despite the initial concerns, long-term Bitcoin whales may not care all too much about the bill. even without regulation, you still held for several years and now have reached incredible levels of wealth. I mean, think about it. If you have 9.6 billion, you sell, the government takes away 50% of it, let's just say, you still have 4.6 billion left, which is more than enough to make anyone happy. So they might just want to cash out and use that wealth. The Satoshi era whale realized more than 2.4 million % increase over 14 years. So the fears are that the Genius Stablecoin Act have made it so these guys don't really want to hold anymore, and now they actually want to sell off their holdings. But some people are just like, they want to sell off their holdings just because they made a lot of money. Either way, it's not really good for us holders if they indeed sell off. Now, this guy has been reported a little while ago. I think you might be seeing a little bit of a sell-off right now, but it also could just be a correction. And after going up so much, we are due for a little bit of a correction. And it's not too severe. As long as we don't see Bitcoin plummeting to 100,000 or less, I think we're okay. And obviously there is a little bit of buy the rumor, sell the news. People are getting extremely excited for these bills. And the bills themselves don't really pump money into Bitcoin. So, people might be pulling back a bit. If we pull back to, 110 to 105, that's fully expected kind of range of price that we could actually be at. And of course, altcoins will fall harder. I expect a lot of them to fall back to kind of where they were, maybe slightly above. And hopefully the altcoin sentiment doesn't completely wear off, but it is completely dependent on Bitcoin. And of course, Ethereum. Ethereum is still at about 3,500 at the time of this recording. But if it retraced to 3,300, I would not be all that surprised. There is another report that I'm very, very suspicious of. It says 36% of Gen Z spend crypto daily. Gen Z are the Zoomers. Got people that are maybe in their 20s right now, maybe even in their late teens. I do not believe this at all. A lot of my friends are significantly younger than me, and they are Zoomers. And I have a lot of friends that are younger millennials as well. And almost none of them actually spend Bitcoin on a daily basis. And you're looking at a sample size of maybe 40, 50 people. And really none of them are in crypto. Now, if they actually did count things like Apple Pay as crypto payments, or they've basically included all digital payments as crypto payments, which obviously is not true. This definitely would be true because a lot of people actually use stuff like Apple Pay and Google Pay and stuff. But those things are not crypto. I'm not really sure where they're getting these numbers. I guess if they took a poll at Consensus or another Bitcoin conference, I could easily understand how they got these numbers. But those aren't real numbers. Not in terms of the overall populace, because obviously if you basically took a poll at a Bitcoin conference, it's going to be tilted towards those people that actually care about crypto in a large way. Because, normal people don't go to Bitcoin conferences. Even regular crypto investors don't go to Bitcoin conferences. It's the hardcore people that go to crypto conferences. So cryptocurrency payments are becoming more popular across various user groups for everyday purchases and high-value transactions, indicating that digital assets are maturing beyond their role as speculative instruments. Gen Z users stand out in terms of daily transactions, with 39% spending crypto on gaming and 36% on daily purchases and travel bookings. I don't really buy that at all. I know a lot of people that are doing travel bookings. They can use places like Travala, but most Travala users do not use crypto in their bookings. Gen X dominates high-value spending with 40% using crypto for travel. That's completely false. I know a lot of Gen X people. None of them use crypto. There might be one or two, but generally, I don't know where they're making these polls. Like I said, if they're using any kind of digital payment, it definitely could be true, but that does not represent crypto. So they did this according to a BitGet wallet survey of 4,599 crypto wallet users. So the thing is, if they're surveying this, these are people that already have a crypto wallet, which is a small percentage of the populace. And, these are people that are actively using their crypto wallet, which is even a smaller percentage of their populace. So obviously, their statistics are very skewed. I'd be really surprised if even 5% of Gen Z people are actually actively using crypto for payments. Probably a lot less. They're basically asking this subset of groups that actually have a BitGet crypto wallet. These are the really hardcore traders, maybe even leverage traders and people that are really into crypto. And if it's among those people, it's more believable. The findings show that the increasing interest in crypto's practical use, gaming, daily purchases, and travel are the top categories. Once again, these statistics are really skewed, and these headlines I don't think are realistic at all. Saying 36% of Gen Z spend crypto daily, saying that like millennials is 35% and Gen X is 29%. I wouldn't be surprised if the real numbers of people actually using crypto are 10 times less, because out of all my friends, most of which are like millennials, Gen Z, and a couple of Gen X people, almost none of them use crypto. I myself don't really use crypto for payments. My credit card works perfectly fine, as does my debit card. So I don't really feel the need to use crypto for any of those payments. Another big piece of news is there's an outrage as an 1.8 billion crypto scam has just exploded. And the ringleader is pretty baller. He actively mocked the victims. And this was a scam in Asia, but if he stole a lot of Bitcoin he's about to sell, it could be bad for us as well. This was actually happened at the end of June, but now it's starting to unravel. A 1.8 billion crypto fraud unravels in China. NFT offers digital citizenship, basically. So 4 busted over crypto fraud linked to 1.8 billion DCGX Xinka case. But the thing is, like, they arrested the lesser people and they let the ringleader run. I wonder if the ringleader has inroads with local law enforcement, so they accidentally let him escape. So Hong Kong police have arrested 4 individuals in connections with an alleged cryptocurrency investment ring that defrauded victims of over 3 million Hong Kong dollars. The operation was linked to a bogus program posing as an affiliated with the Dubai Gold and Commodities Exchange, DCGX. However, the alleged ringleader escaped and publicly mocked his victims for their supposed lack of intelligence in falling for the scam. So not only did he take all their money, he mocked them and said they were stupid for letting him take all their money. This guy is a boss, man. He might be a boss that ends up in jail soon and the prisoners might pwn him, but for right now, he is a boss. The arrests are part of a wider fallout from the collapse of so-called DGCX Xinka. That was a platform in mainland China. This platform was obviously a scam. On June 25th, the platform abruptly froze withdrawals for its 2 million users. By the next day, it had completely gone offline. That's when you know you have been completely had, people. If they freeze all your funds and then go offline the next day. Marketed as the Chinese branch of Dubai organization, which it was not. They promised 1% fixed daily returns. Now, for those of you that don't know, 1% fixed daily returns, if you compound them, is like 500-600%. So if someone is offering you something like that, they are 100% a scam, because obviously they can't like produce those kind of returns no matter what kind of assets they are in. And you should not believe those kind of returns just because you got really greedy. Before shutting down, the platform allegedly transferred around 1.8 billion USDT through Tornado Cash. So obviously, if your platform is transferring massive amounts of money through Tornado Cash, it might just be a scam. And I'm going to go as far to say that if your platform is transferring massive amounts of money through Tornado Cash, it is almost it is almost certainly to be a scam, because I don't think legitimate businesses would actually use a mixer like Tornado Cash. The scheme employed a paramilitary style pyramid structure, dividing members into 9 ranks from squad leader to commander. Users were encouraged to recruit new investors to climb ranks to earn USDT bonuses. So, this could actually be a little bit like BitConnect, where the referrals don't really know what's going on. They just want the bonuses. And that pyramid structure basically sucked a lot of people in. And the only people to really benefit are the people at the top. That would not actually surprise me at all. On July 9th, authorities in Taojiang County, Hunan Province, officially classified the platform as a suspected case of fundraising, fraud, and illegal network-based pyramid selling. Obviously, it took them a while to catch on, because it does actually take a while to accumulate $1.8 billion. So all their stuff was conducted in USDT, placing the operation outside the scope of Chinese traditional financial oversight. So obviously, Bitfinex, not really within Chinese financial oversight. They will work with the authorities, but the authorities have to identify the fraud first. Obviously, stuff like this is actually preventing, I think, the Chinese government from really wanting to bring basically this stuff into the mainland. Obviously, like, if they endorse it and something like this happens, it really, really looks bad on their part. And of course, the crazy thing about this is that the founder reportedly fled abroad and mocked victims in group chat. I think, like, if you're like, this is a bad idea, because there's a lot of victims out there, 2 million, and if they somehow recognize you on the street, they might just jump you. So mocking them is not a good idea. So he said everyone's wealth should match their intelligence. Since your wealth didn't match your intelligence, I helped balance it for you. I only took what didn't belong to your level of intelligence. Now, there's a lot of people that are rich that may not be smart, but that doesn't mean they don't own the money. So how rich you are actually has no bearing on the level of intelligence. And if people aren't that familiar with crypto, they can easily fall for stuff like this. Anyway, so obviously not exactly something I actually endorse. And obviously, if you pulled off a multi-billion-dollar scam, I highly discourage you from mocking your 2 million victims, because there are a lot of them out there. And if you mock them, they might get mad at you. And if one of them pwns you, law enforcement may not be all that willing to actually take up your case. And you're kind of alone, because if someone is targeting you, you can't actually go to law enforcement because you ran a $1.8 billion scam. So you're essentially out there mocking a lot of people, and you don't have any protection, and you don't really have a great way to get governmental protection for yourself, your family, or your assets. So a very, very bad idea. But $1.8 billion is a major scandal, and I'm not really surprised it happens. This stuff happens in crypto all the time, but very sad for the users. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.